BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish.
Let's go. V-shaped recovery. Guys, welcome back to the Rollup TV. And he's running around behind the scenes trying to get a coffee. He's going to be back. We missed him last week, but we're going to have a full show for you guys today. MegaETH launched Mainnet. We're going to be talking about it, and we're going to get the lads from MegaETH on the show. We are also going to be chatting with Michael from Liquity on our Stabled Up segment of the week. I'm watching Andy spill coffee behind the scenes. And guys, it may be a bear market, but we're going to keep the energy alive here at the Rollup TV. We're not going anywhere. We're going to go straight to the Empire State Building. I don't know if I was supposed to say that, but we're coming to New York in a big, big way. So be ready. Don't go anywhere. We're just getting started here at the Rollup. All right, let's bring this maniac up. See what he's thinking.
Oh yeah, I'm locked in. Yes, sir. What's going on, boys? Good to be back. Absolutely good to be back.
Andy, go on a little Japanese rant. If you don't mind, I'm going to put some headphones in.
Dude, I went to Japan for the last week. It was insane. We had powder on powder on powder. I mean, yeah, I just lost my mind. We were just skiing hard. Stayed a couple nights at the Amman Tokyo, probably the best hotel I've ever stayed at. It was pretty insane as well. And yeah, now we're here. We're back in the States, somewhere in an undisclosed location, and we're all in uranium still, pretty much. And we missed the drawdown on crypto. We identified that Sky is going to be an outperformer, which it is, and it is literally breaking out to new local highs. The N7 index, for those of you who've been following the Neo Finance Index, is absolutely cooking. I mean, absolutely just on fire. So if you guys have been paying attention to that, you're probably winning. We have a new dashboard that we're going to get ready to launch shortly. But yeah, I mean, I'm in uranium. It looks great today. I'm a little bit underwater still, but yeah, I mean, successfully avoided the drawdown. So I don't know how else to put it, but I was screaming on the stream that I was bearish. Every guest that we had on, including my lovely co-host Rob, was bullish. And here we are today with a $70,000 Bitcoin. I feel like 60K was a great buy, to be honest. I'm looking at the charts now. Looks pretty good. But I don't know. I think we got a while to go here, boys. So I'm chilling. I'm letting the market come to me. I'm in no rush. And yeah, I don't know. It feels nice to be in a good position rather than in a it feels nice to be in an offensive position rather than in a defensive position in the market. As far as travels goes, I mean, we got some other conferences coming up. We got NearCon in the end of the month. Should be pretty epic considering all of the open claw happenings and Claudbot happenings. And we also have ETH Denver, which honestly, I heard it have not filled up their sponsorship slots. And so, yeah, pretty excited for that.
So Andy, let me fill you in on some of the streams that we had last week. There's really two and they're diverging theses and concepts that are happening. On one hand, we have the emergence of neo finance. This is something that we predicted and we saw firsthand at SmartCon last year in November, which feels like a lifetime ago. But yeah, SmartCon was back in November. And we saw how all these institutions are starting to embrace tokenization and digital assets and blockchains. This trend is accelerating. We had, several head of tokenizations and digital assets on the show last week. And then we also had this crazy AI sprint that we went on last week as well. And so we're seeing the thesis play out in two respects. One is that old guard crypto infrastructure slop with no product market fit is being forced to innovate, right? So I think that's a check mark based on what we've been talking about. They're innovating in two separate directions. It almost seems like part of the old crypto infrastructure slop guard is innovating into the neo finance direction. They're going to New York. They're embracing tokenization. They're embracing digital assets. Then you have some deep tech teams that are pretty much going all in on AI. They're running Claudbot. We had Near on the show last week. They were talking about OpenClaw. They have some really, really exciting things coming up. And we're also seeing the emergence of kind of like a hybrid world in the middle. We had multiple people come on last week and talk about vaults. There's some people that are starting to think about how AI could play a role in asset management and vault management. And then obviously, it just in terms of the amount of financial mechanisms that we're able to encode into vaults in terms of, restricting entrance and programmatically changing the structure of these vaults. This is also starting to take a lot of people in the legacy financial world by storm, and they're really embracing it full stop.
What about the vaults? People want us to do vaults for our N7 index, by the way. Plume hit me up. Glider hit me up.
I had someone hit me up and ask if there was a place or a venue where someone's able to buy this index as one product, like an index fund.
What did you say?
I don't know. What did I say?
I got some interest though. I think it's a good idea. I mean, if you look at the dashboard, it's absolutely cooking. I mean, Sky's backpacking right now, which is sick to see. But yeah, I mean, I think that the index is doing really well. So yeah, I'm excited about it.
There was more drama with Hyperliquid. Should we hit some headlines? Or
I think our
guests
are here. We've got our MegaETH guests today. Their mainnet has launched, which is epic.
Yeah,
we got Lei and our lovely friend Amir, who runs ecosystem over there. Going to be covering what's happening on the Mega side. Their mainnet launched today with the interesting KPIs for the Mega token. As well. So I thought that was interesting. So we're gonna get them up and we're gonna get that started. And it's my first stream in a little while. It feels good to be back. It's been a hell of a week.
It's good to have you back, man.
Market's in the gutter though. My God,
we missed you. Oh, we've been in the trenches the last week.
Yeah. I bet you have.
Let's bring our guests up. Do we have them ready?
Yeah, I think so.
Let's bring them up in the back and get them going here.
A little Monday stream action, huh? Boys are a little rusty here, huh?
Oh, no one's rusty here.
I dropped all my coffee coming in here.
Yeah, we were talking about it on the stream.
I'm enjoying my last 3 weeks of freedom before I move to New York and absolutely become a stimulated rat race guy. Stimulated rat in the race.
Yeah, well, they love the rats in New York. So
Yeah, they'll definitely be there. That's for sure.
You're running the rat race.
Look at that haircut, bro. Huh? You don't want to grow it out? Oh my god, dude!
It's starting to get shack.
You gotta let that thing fly, bro.
I end up with a rat. I get like a mohawk all the way down my back. It gets too long.
You gotta let that thing fly, man. You really do.
I think we're ready. I think we're ready to bring up two friends of the show. Well, the MegaETH team is a friend of the show. I think it's our first time chatting with Lay and Amir. But it's an absolute pleasure to have you guys on. We're live.
Yeah, gents, congrats.
Awesome.
Congrats.
Thank you. Thanks for having us.
Thank you so much.
How are you feeling
Long
over
time
there?
coming.
Pretty-
Starting
pretty
line.
excited. Yeah, a bit exhausted, but also very excited.
Tell us what the last 72 hours have been like over in MegaETH headquarters.
Just a lot of last minute prep, just fixing some little bugs that come up here and there. No matter how much preparation you can do leading up to this, something always comes out of the cracks. So just taking care of all of that, and yeah, excited to be here now. Let's see what comes up next.
There's always something, right?
Yeah, and Lay, from the engineering side, what's the last 48 hours been like for you?
Yeah, RPC fires, putting out RPC fires, more RPC fires, talking with infra teams, and yeah, lots of liquidity movement. So yeah, it's a kind of a crazy show, but yeah, we're pretty happy about the end result.
Guys, I think everyone is probably at least surface level familiar with MegaETH. There's been a lot of shake up in the L2 mental model as of late with Vitalik and his whole scene as of lately. But you guys have been working on this a long time. There is still strong demand for what we believe is high throughput chains built the right way and targeting the right areas of where blockchain can be helpful, which is primarily in the financial world, as well as in other facets. Just I would love just to hear the top like 3 or 5 things, the highlights, if you will, that you think, someone who's maybe not so familiar or at least just somewhat familiar with MegaETH, what are the top 3 to 5 things that they need to know about Mainnet?
First, it's Mainnet, so it's real money, everything's real, and we just went through a 11.4 billion transactions per second. Sorry, 11.4 billion transaction count stress test over a period of 7 days on the mainnet, on the same mainnet that is going live today. So it's really high performance. It's kind of battle tested by the stress test. Second, we are meaningfully differentiated from other rollups, from other layer 2s or the layer 1, because we have a pretty performance latency focused sequencer architecture that you can literally experience 10 millisecond latency if you transact on MegaETH. And I think third, we have a very meaningfully differentiated set of applications, which I think Amir will dive in.
Yeah, no, as Lay was mentioning, and as Andy, you experienced over the summer when you came to hang out with us in Copenhagen too, we've been spending a lot of time just making sure that we're indexing heavily on net new applications, apps that really showcase the power of the underlying chain. So a few of those teams are ready to go day one. We put out those list of KPIs, one of which will be Mafia apps fully deployed. We're starting off with about 7, and then additional ones will just roll out over the course of February and March. So again, we want to give people things to do on chain. Just launching something and kind of letting it live there. We're just going to continue down that. That's going to continue to be our MO.
Yeah, I mean, I was there in Copenhagen this past summer in July, I think, and the types of different teams were very interesting. A lot of younger people experimenting with really cool ideas that are possible when you have a really performant chain. And I thought that was like the actual interesting thing. And Rob, I think to your point as well, and what I'm curious, guys, like what is
Of course, my Wi-Fi cuts out, bro.
It's totally all right, man.
Amir's having some troubles behind the scenes.
Yeah.
Go ahead, Andy.
Can you guys hear me?
Yeah, we can.
Yeah. Guys, Lay, I'm curious, like what's actually new for users here on day one compared to like the frontier phase? I know that you mentioned it's real money. What can people do now that they couldn't before? And then we'll talk about some of the apps with Amir.
Yeah, so of course they can now bridge money onto MegaETH, and we have the USDM, which is the like the official stablecoin on the MegaETH ecosystem, and all the avenues towards USDM. Well, Amir is now perfectly gone, but yeah, yeah, all the avenues towards USDM is now open. There's a website, rabbithole.megaeth.com. They can use to bridge and swap different forms of tokens onto MegaETH. Second, we have a curated list of applications also on rabbithole.megaeth.com on the front page, and they can feel free to check out. We have a very diverse set of applications.
Alex,
And
can you hear me or no?
third, developer access
Yeah,
is
for
now
some
full
reason
open.
my connection was cutting in and out.
RPC is open, high performance. We have a really interesting
I do have a VPN.
distributed setup
Should I turn that off?
of RPC servers around the world,
All right,
which
cool.
I don't think anyone else in the crypto industry has done before. So yeah, developers should feel free to come and bridge some ETH. Yeah, and try to deploy a few applications. Maybe they'll find that their application will run actually pretty nicely on MegaETH without any modification. Yeah, and the documentation website is updated. We have a very detailed list of differences in terms of the EVM behavior between us and the layer one, and I think these are all very good reference material for developers. Yeah.
And Lei, I think something that's been getting a lot of attention was the concept of the KPI related milestones and objectives. And I think we'll hear from Amir about how this can affect some of the ecosystem of the applications in MegaETH. But I'm curious from your perspective, when you're thinking about the game theory around the incentives of these KPI based rewards, how do you think this could help to incentivize sustainable growth in the ecosystem?
The KPI is really designed around the MegaETH revenue model, right? So we'll get revenue from mainly two sources. One, the USDM yield, because they are basically the amount of money that are sitting there semi-inactively on the MegaETH ecosystem. So we get a yield from it. And the second part is the so-called active money, like the active trades on the exchanges, on the lending books, right? So we collect revenue from these activities in the form of the proximity market, which is, I think, a very interesting initiative that kind of deserves a different, a whole different podcast. So proximity market and also just pure app activity, right? So the KPI is really centered around measuring the success in us generating revenues from these two main sources, like inactive and active money.
Yep.
Yeah. Okay. That's exactly where we want to go. And Lei, I'm just curious to dig a little bit deeper into the tech. Like, what does this truly enable? As we're thinking about, the throughput, the amount of, and this is one of MegaETH's, big differentiators, as you mentioned in the beginning, was the ability to have, the safe, secure, but also the speed and the abundance of transactions that can go through this network. We've oftentimes seen bottlenecks on latency, throughput, this sort of thing. As we create more abundance for these transactions, new use cases end up developing. So could you just speak to, the levels of scale that you were able to reach with MegaETH, how you were able to do that, and what this enables for the MegaETH applications?
4 billion transactions, and that's about 14,000 transactions per second. And we did that all while maintaining a very low constant transaction base fee, or base gas price, as well as low latency. So latency almost never fluctuated. The base fee did not fluctuate during the whole period of the stress test. So I think this scale is not seen before in the crypto ecosystem, because in just about 7 days, we kind of surpassed the transaction volume on Avalanche and BNB chain through their lifetime, right? So I think it's a new capability that's being brought to crypto developers. And what can be very interesting, I think, first, games that spend a ton of transactions on, say, user interactions, high frequency trading, and really fine-grained market movements, right? So, for example, now I think with AMMs, for each trade, there's maybe 1 or 2 transactions, maybe 1 user transaction, a few MEV front running. But with fully on-chain order books, there can be multiple market makers competing for the same revenue opportunity, right?
No,
and they have to cancel order, submit order, and I think all these activities are only for 1 user order to be made. So I think these kind of applications will really benefit from the high volume of transactions. We already have market makers talking to us, asking about the asking if there's going to be any fluctuation in the base fees, and our answer is not likely, given the volume, given the headroom of throughput you have. So I think these really benefit those. The scale really benefit those scenarios.
Yeah, Lei, man. I mean, you guys have basically cracked what I think a lot of the L2 kind of roll-up centric roadmap was aiming to do in chains. But I do remember when you guys were launching the idea, right? It was almost contrarian. It was almost like it was wow, these guys are going to juice the performance of the sequencer, one big beefy sequencer, create a very, very, very high throughput L2, and kind of like move away from the traditional kind of thought process towards rollups and L2s in general. Now it feels like that contrarian kind of feel and take has actually shifted to be much more consensus. Like a really high performance chain is what Ethereum needs. It is like where this space is heading. And it's also just kind of more into like a practical era. From the development standpoint, I'm sure you've been very heads down and tunnel vision focused on the end game from day one. But talk to us about how the market commentary and how the shift in the narrative, as well as the shift in the standards of performance, has affected what you've built at MegaETH, as far as the shift from kind of this contrarian nature of what you're building to what now kind of feels like the consensus only right thing to do for L2s is to really specialize in something and really try to outperform everyone, either in some sort of capacity. It feels like this shift has happened over the last year or two. Talk to us about what that means from the development perspective, how you kind of manage these market reactions, commentaries, and narratives as you're building something with such one vision, one direction that you guys have.
Yeah, good question. I feel that I personally feel very, 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 very fortunate that we have a really dedicated community and a bunch of supporters that I think supported our vision from day one. The kind of the vision really came from the fact that we are performance people, we are kind of systems people, and we don't enjoy the thought of leaving performance or leaving anything on the table, right? If the layer 2 architecture can be brought to this kind of scale, then we should probably do it instead of, I guess, focusing on something or on something else. So yeah, I feel very fortunate that we have supporters from day one, and I think over the time of us building this chain, from the DevNet to testnet to the mainnet alpha version, the frontier, I think, I do agree that the consensus on how layer 2 should, what kind of marketplace, what kind of gap layer 2 should fill in the EVM ecosystem is getting stronger and stronger. And I think the end result is Vitalik's post a few days ago on Twitter, right? Basically saying that rollups or layer 2s should focusing on a few niches, as opposed to being like maybe 2x, 3x, maybe 10x speed, 10x faster layer 1. They should aim to be either extremely fast or at least have something unique to them, right? So we feel that it's pretty interesting validation to our roadmap. We're not surprised, but we're pretty happy that we took this path. And in terms of the actual engineering, I think it's actually on the more boring side. We had those ideas, say EVM parallelization, JIT compilation, replacing the Merkle Patricia chai with an in-house data structure plus implementation, and or securing it altogether using a rollup layer 2 scheme. So these roadmaps were set, I think, almost 2.5, 3 years ago, and we have been just sticking to the roadmap unchanged. So yeah, I guess the actual engineering is tough, but yeah, it's not very dramatic.
Back. I think we got you.
Can you hear me now?
Yeah, you're good.
My connection's not bad? Okay, good.
No, I was just asking Leia about kind of the development mindset with regards to how contrarian it was to create a super fast chain as an L2, juice a sequencer, forget about what everyone else is doing and do it your way. And then now it feels like, as Leia mentioned, in this post Vitalik era that he's written, it just feels so natural and so right. And I mean, we've been harping on this, even though some of the modular thesis stuff that we put out was wrong. I think a lot of it with regards to the specialization was correct. And I think that's kind of what Vitalik's getting to. That's what you guys have built. So let's talk about what that enables then, Amir. I was there in Copenhagen. You were stoked on the applications. You're kind of facilitating the MegaETH ecosystem. What does this look like from the app side? What can we do today on MegaETH? What are the applications that you're excited about?
Yeah, no, definitely. So obviously people were familiar with a lot of the Mafia 1 teams over the course of testnet. What I'm really excited about is for people to start interacting with the teams that you met in Copenhagen, Mafia 2. To start, we're going to do a gradual rollout over the course of February. Day 1 right now, we obviously have some Mafia 1 teams like Showdown. We're going to have a World come out in the next couple of days. We have a team that's building on top of World, just showcasing kind of like what we preach within the Mafia, which is composability and teams leveraging one another, called Hit 1. So they're using WCM as trading infrastructure. Again, consumer finance, creating that entertainment experience. Next week, we're going to have a fan favorite in Euphoria. They're going to kick off their trading competition, which I'm really excited for people to see. And again, for us, it's catering to as many different audiences as possible. For folks who want to have this like entertainment, consumer finance experience, that feeling of just like dopamine-inducing trading, that's what Euphoria and Hit 1 are here to do for you. For teams that are looking for net new assets, and which is something that we are going to be focusing a lot on over the course of 2026. We have BRICS. So the BRICS team, they're looking to tokenize the Turkish lira carry trade. So they're going to be coming in February as well. So we want to, again, cater to as many different demographics as possible. And for us, net new is not just in terms of the feelings of the apps, but what those apps are able to actually bring to end users. So that's what we have to look forward to. And then obviously back half of the month into March, we have teams like Hello Trade, former directors at BlackRock, building perp for equities, which we're really excited about. We have Rocket, they're building redistribution markets. Blitzo, gamified payments, which I'm really stoked for everyone to start playing around with.
That one was sick, man.
Yeah. That's one that I got the demo actually a week or two ago when I was in London.
Okay, sick.
Yeah, it's like it's so dystopian, but actually it's just so entertaining.
So dystopian. So Rob, it's like you saw me spill my coffee today, but it's like if I went to buy my coffee, I could gamble to basically do double or nothing. Effectively, that's one basic example. So you could pay for your coffee and double if you lose, or you pay nothing if you win. I think you're on mute, but like think about what that goes to like sending money to friends or like
I see people do this. They're in their they're like vlogging and they're like, all right, guys, I'm gonna go. I'm gonna go to the dentist. I gotta like, all right, am I gonna double it and pay double at the dentist, or am I gonna win and I get for free?
Dude. Yeah, and it's so well integrated to like the typical payments experience. Like I was sitting at a restaurant there. I didn't realize I had the test flight app like paired with my credit card. So when I tapped my card, my Apple Pay, next thing you know, I just get a drop down that says 200% cash back, double or nothing. And I was like, this is just
dude, I love that, man.
And that's just one of the game features. So the product since you saw it in July has matured quite a bit. So really excited for people to get their hands on that.
Just quick question on that. So what is the game that's happening underneath? Like, is it verifiable? How do we know whether we win or lose?
Yeah, so I think at some point, we should actually start bringing some of these mafia teams on board as well, because I would love for them to be the source of truth for their products. But again, everything's verifiable on chain. Your counterparty here is a vault that's being run by the Blitzo team, and then general idea here is if you lose, you're obviously paying your merchant as well as the vault. If you win, the vault is what ends up actually covering your expense. And again, this is just one gameplay. Eventually, they want to broaden the scope and take on this meta of being sort of like banking for Zoomers, sort of like this next generation Gen Z neobanking.
It's crazy.
So something that I'm really, really excited.
I think it speaks to the versatility of the MegaETH brand, right? You have ex BlackRock perps equities being built, which truly utilizes the underlying tech. And then the memes are tech in and of themselves, right? You've got like this cachet around the brand as well that sort of enables like this neobanking, this Zoomer neobanking right alongside a lot of financial infrastructure, so that you do benefit from composability all across the stack.
Yeah, no, and I mean, like, pointing it to those two specific teams also just it shows sort of like this dichotomy that you see in the mafia is just very poetic. We don't want people sort of pigeonholing us into saying we're just doing X or we're just doing Y or we're just doing Z. Yeah. Any time a person thinks like, okay, we can put Mega into a box. This is what the ecosystem's about. It's a DeFi chain. It's a DePIN chain, whatever the case is. We're able to introduce an entirely new team that kind of invalidates the entire thesis. Yeah. So that's something that we're going to continue to double down on over the course of 2026 and beyond.
I love that. Lei, let's talk Mega token. Interesting KPIs from the kind of pure on-chain metrics, right? From stablecoins with USDM to other kind of important metrics. Also, USDM revenue will end up being used to be buying back and accumulating Mega. People are kind of curious about why the stablecoin, et cetera. But let's talk about the on-chain KPIs. How is that going to work? How will you enforce these on-chain KPIs? And maybe just talk to us a bit about some of the decision-making process here from the development side as to why you guys feel that there are certain, like, basically on-chain North Stars that you're looking for, and kind of what that looks like from the dev side as far as implementing that KPI, enforcing that KPI, et cetera, et cetera.
Yeah, good question. I think Amir should talk more about the inception of the idea, right? And on the implementation side, it's kind of straightforward because we have enough data sources. We have our in-house indexer, and we will have a dashboard that is public that tracks all those metrics. I think for USDM, it's actually straightforward. The circulating supply of USDM, you can even look at it. You can even look it up on those block explorers. And for Mafia apps, we have a few key Mafia apps that will give us insights into their ops, and we'll collect those data and post it onto the public dashboard. Same goes for the proximity market. Same goes with other KPI criterias. So enforcement will be manual, but the tracking process will be transparent as possible on this dashboard. Amir, do you want to go next?
Exactly. Yeah, no. And to the USDM point as well, something that we're not trying to kind of incentivize over the course of this KPI program is just a bunch of inflated TVL metrics where people just have a bunch of USDM sitting in their wallets and doing nothing. I think that is net negative for the ecosystem. It doesn't actually do much. So for us, we care a lot about having that USDM actually make its way into the applications too. That's something. So we're going to have verified smart contracts, places for people to actually interact with, deposit into, and again, use that as an initial bootstrapping period for liquidity on the chain, be it our lending products like Avon and Aave, whether it's WCM and their lending arm, bootstrapping our pools on Kumbaya. We want to make sure that people are maximizing the capital efficiency of this USDM as opposed to, again, just kind of holding it idle in a wallet.
Cool. No, I mean, is this the first time that you guys have seen this kind of KPI-based token launch? Or did you pull inspiration from elsewhere? How did you kind of come up with it?
So yeah, so it's actually Namik and I were in London a couple of weeks ago, just thinking about like what are some like different ways that we can really start getting the ball rolling at time of mainnet launch. And a lot of it draws inspiration from how we were thinking about KPIs at the chain level going forward with increasing our floats. At the end of the day, like a lot of people operate on a very kind of short-term mentality of, okay, let's just get to this one point, and then in the case of like traditional like KPI traditional unlocks, it's like, okay, everything's just time-based. No one's incentivized to do anything. Here, it's a great way to actually get people to interact with the products, care about the thing that's actually being shipped today, which is the hard work that Lei and Ilong have been putting into Mega itself over the last 2-3 years. So we want to make sure that people don't see these as two independent products, be it the token and the chain, but rather have one tie very deeply into the other. So that was very much the thinking. How do we actually overcome the cold start? How do we help these teams find initial set of users in terms of the applications? And then again, a lot of that is basically like begets additional activity on the chain, and then you create this flywheel from there. And we plan to just like accelerate this also post mainnet launch, post token launch with our mainnet campaign. So we definitely want to keep the activity going, keep people using the chain. And again, like success for us is making sure that we have our killer apps. We have experiences that bring people naturally back to Mega. So that's going to effectively what we're going to continue doing.
Epic. Gentlemen, thanks for being with us on Mainnet Day. I'm sure it's absolutely insane on the internal Slack. I think I saw one of Shuyao's tweets about agents being so active in the coding process, Lei. So I'm sure you're very deep in terminal and Claude code and anything else that's happening, RPC management, customer management, apps, users, bridging. So we'll let you guys get back to it. A big congratulations to you all. It's been a long journey for you, and this is kind of like a new day one. Even though that's a base saying, it very much is a new day one.
Really appreciate you guys. Thank you so much.
Absolutely. Thank you guys.
Bye now.
See you soon. Bye. Alrighty, MegaETH is launched as proud Fluffle owners. Pretty stoked to see that thing go live. Also a part of the Good Idea Ventures Portco through a lovely friend. And yeah, guys, I mean, that is the MegaETH launch. I mean, I think everyone is ready for the token. I think what they're doing with regards to not launching it instantly is the right move. But we'll see the appetite for users on chain. I think right now is probably like one of the hardest times in the last 2 years to launch a new chain. But I think if you can nail that launch, it's also extremely strategic timing. And so there's like different ways to kind of look at it.
The main obstacle that I think MegaETH is going to have to overcome is really they're competing with L1 at this point. It may not seem like it, but I think for a while there,
that sounds bullish.
L2s were like, hey, kumbaya, we're all Ethereum. Very DEI, and now it's like, now Vitalik comes out and it's like, hey, if your L2 isn't really doing anything special, get the fuck out. L1 is scaling. No one pays high gas anymore. You can actually do things on L1. So can you do the things like you can't do billions of transactions per second, but you can do a lot. And I think people still value the security of the L1. And so MegaETH is going to have to, they're going to have to create some use cases that supersede the scale of L1 in order to provide something unique.
Yeah. I mean, we did see, and we did hear, I did see a lot of cool applications in Copenhagen this past summer. And we did hear a lot about some interesting ones as well from Amir. So shout out to MegaETH. Congrats, guys, on the launch. Guys, if you're watching on YouTube, toss a like, toss a subscribe. I see you guys in there. We got chat on YouTube, chat on Twitter as well. It is Monday, February 9th. We got a lot to talk about. So we're going to roll into our new segment of the day before our Stabled Up episode with the CEO of Liquity and roll into all of that. And then we've got our Intense Day special being rewritten here, talking privacy with Illia, with Ellie, and with Joel from Dash, and
which
maybe
I
a special
think
experience from Mert.
I'm excited because this is following all of the Claude Code like privacy leaks that have happened as a result of credentials and API keys being hooked up to open source software. So it gives us a lot more to talk about. Before we have our privacy panel and our Stabled Up episode, let's see what's happening in case we missed everything.
Amir is always watching. All right, yeah, let's go. What's up, Amir, guys? Crypto stocks enter full capitulation, guys. Crypto stocks plunge. This is Friday. MicroStrategy shares down 80% from record high, fall to 100. Coinbase down 68% from record high, below 150. I sold that at well over 200. I was glad about that. I still have quite a bit, though. Coinbase is now trading 166. That low tackled at 145 Friday. Robinhood down 54% from record high. It tapped 72. It's at 88 now. All these are bouncing today. Galaxy down 64%. Circle down 84%. Bullish down 80%. Mara down 70%. Gemini down 85%.
Gemini. Is this
SBET down 95%. Full capitulation. Yes, Clipper, dude. In fact, it is. BMNR down 90%. Wow. I mean, Galaxy bottom at 16. 21 Capital down 90%. I mean, you got to think that these are buys, at least for a short-term bounce. I mean, I'm not doing any of these like shorter-term trades. You guys know that I'm heavily in uranium right now and just kind of chilling, waiting in uranium, copper. My gold and silver positions look great. Obviously got my long-term never sell Bitcoin and ETH. But these stocks are wrecked. I mean, what a reflexive flywheel on these things.
The gold and silver positions looking great is a whole nother conversation. Those things went for a whirl, but this is the new altcoin complex, Andy. You're looking at it. These are publicly traded stocks. These are tickers on the NASDAQ, the New York
Insanity,
Stock
right?
Exchange.
Insanity.
These are down altcoin-sized percentages. This is the new altcoin complex.
MicroStrategy had to have been bottom there at 100. That is insane, man. That is nuts. So, yeah, guys, I mean, that happens over the weekend. We're getting a bounce now. Again, we're not really too focused on trading these things. It's just kind of insane to see the moves here from these stocks. I mean, yeah, right. Like these things have huge market caps.
Yeah. Yeah. This is
wow.
It's a great time to build because there's an actual pathway to build a massive company that can go public in all of the same ways that a typical startup to Series A, Series B, C, D, all the way to going public typically does and IPOs.
Yeah, I mean, shout out to BitGo, right? Like BitGo is live on the NASDAQ or on the NYSE. They've got they're down only from launch, but that was another one that was like BitGo in 2017, 2018 was a small company, and they've really, really grown. So, all right, guys, that's the state of crypto stocks. I mean, look, if you're a long-term holder, I don't really think there's anything to worry about. We are long-term crypto bulls. Again, there will be a lot of, that was a really hard dump. Sol hit $68 on that dump. Pretty nuts. So we'll see where we end up here.
Hard. I mean, Bitcoin got into the 50s. So
58,
59. It's back up to 70. So it's always tough to catch knives, that especially if you're doing anything on leverage. So we stay off the leverage around here, stay off the short term, just take it easy. Don't get shaken out. And
let's move on. We know we're in a bear market because our lovely friends over in China are banning crypto again.
So the reason that I think this is, and they've banned crypto, every year
since
for
2017,
8 years straight.
They've banned crypto.
The reason I think this is relevant is because there is another headline talking about how in the last week we saw the largest difficulty adjustment of all time. So obviously Bitcoin, it has to get mined. It's proof of work. And so if miners go offline, difficulty will adjust, meaning that it becomes easier to mine Bitcoin. When people drop off, there's less hashing power. The difficulty makes it easier for that remaining hash power to find Bitcoin. This obviously had an impact. I think there's two things that led to the difficulty adjustment. I think China had something to do with it because they did compound the decrease in prices with this ban. The second thing is that we're seeing miners sell Bitcoin to fund new AI data center build-outs.
Yeah.
This is something I anticipate will continue, especially with Bitcoin at these depreciated levels. Bitcoin is they had reserves, and so they rely on selling those reserves. If all of a sudden, after in a 48-hour span, their balance sheet takes a massive hit, they're no longer able to operate profitably. They have to either shut down and sell their equipment or pivot and sell the Bitcoin that they have. And this machinery, they're not shutting down. The point is that they're not shutting down the machinery because it can be repurposed to provide compute to AI and monetize that way. So I think the mining complex is something to watch going forward.
I mean, I think that's part of it, right? And I mean, with regards to this news, all domestic entities are banned from unapproved crypto issuance. Internet and technology companies are banned from offering crypto-related services. The Central Bank of China confirms that real-world asset tokenization is banned. Chinese entities must get exclusive, explicit regulatory consent before offering Chinese services abroad, tokenization abroad,
including stablecoins. There was Chinese-backed stablecoins that they said are not official money.
Yeah, they will have strict supervision of any domestic firms pursuing offshore RWA tokenization, and it basically shuts down any remaining gray areas around crypto and RWAs tied to China. So yeah, I mean, what's new there? So
yeah, let's get to our next headline, because I think this is where the meat of the mechanisms that cause the unwind, at least this is the leading theory. We're going to start with a few theories as to what, and it's not just, it's not just one size fits all. There is a combination of things that are happening here. And so from our guy over at Flood, a fellow hyperliquid bull, describes a few theories, and it's probably some some combination of all of these with varying weights and impacts. But he says that selling appears forced and indiscriminate, non-discretionary, meaning that, there was something that caused this. It wasn't just everyone, there was consensus that the tech is worse. This isn't product market fit. There was something that caused this unwind. The price action suggests that balance sheet driven liquidation, not sentiment. Again, there was something on the balance sheet that caused a liquidation cascade. This could be a result of sovereign scale dumping, 10 billion plus, exchange level failure, or emergency unwind. It could be ultra wealthy family office liquidity crunch. This is now the leading theories. This next one, the risk of hidden leverage via IBIT ETF, with growing borrowing against ETF exposure, and too big to fail banks. It feels like systemic deleveraging, not a normal crypto drawdown. And so I think the next tweet actually sums this up and really digs into the nuts and bolts of what the IBIT over leverage, what it was made up of. I've seen varying things. I saw something so wild, said that Tia and Eigen were used as collateral to borrow and then go and dig deep into silver and gold.
Okay, let's pull up the next headline, because I saw this as well, and I thought that this was going to be particularly interesting. So TLDR here, guys, is IBIT saw its highest ever volume traded, 10 billion today, which I think was
Friday.
Friday. 900 million in IBIT options premium traded, also an all-time high. Bitcoin and Sol were sold off just, band for band in lockstep. And there wasn't that many liquidations on centralized exchanges.
Right.
Like it wasn't exactly an on-exchange leverage event. The evidence here
not the exchanges that we're accustomed to, the centralized exchanges.
The evidence suggests that the stress centered on one or a handful of large IBIT holders, not spot Bitcoin markets.
Right.
IBIT has now become the #1 venue for Bitcoin options, implying that there's probably some options-driven losses that happened here. Some of the 13F filings show single asset funds heavily concentrated in IBIT, some at literally 100% of their holdings. And now, many of these
are going to just real quick, Andy,
Hong Kong.
Real quick, we're going to see the 13F filings come out. I believe it's in 5 days. I think it's this Friday. And so this is all hearsay, speculation right now. But what I like about this theory is that when the filings, because IBIT is a publicly traded vehicle, we're going to be able to see the economics of who holds a large position in IBIT. That paperwork is going to come out, I think, on the 14th. It's either this Friday, shortly thereafter, and then we will get confirmation or rejection of this theory. Yep. Well, I mean, I can continue here.
Yeah, I mean, there's just a couple things left to hit there, right? Like, it's probably a Hong Kong-based non-crypto hedge fund running levered IBIT options. And if that's the case, then they just got absolutely BTFO'd. Silver had a huge negative day, right? That week, so did gold. Also, the yen got, had a crazy unwind. Maybe there's a carry trade there.
Yeah.
Perhaps this was something that was uncorrelated to crypto, but then led to them having to nuke a lot of their IBIT position to cover their losses in other sectors. I think that was part of what happened here. My thing here, guys, when it comes to this stuff is this always happens. Like, there's always an explanation for why the market went up or down. Like, there's always is. And it's really funny if you look at the 4-year cycle. This was just what happens. You dump, you get a little bit of a bear flag. Everyone's excited. We're going back to test 107. Then you dump again. Now, maybe we shouldn't have dumped to 58K. Maybe this was a bit exacerbated for whatever reason. But like my bigger thesis now that supports the reason why I've been bearish for the last 4 months is this is not going to go away. When Bitcoin goes from 98K, 97K to 59K in a matter of like 5 to 12 days, I think it was like 12 days, somebody just fucked up. Like, what about everyone who bought Bitcoin on the DATs at over 100K? What about everyone who bought ETH over 4K, over 4,500 in their DATs? What about Samani's forward industry company who bought their ETH or their SOL above 230? Like, what are they going to do? And then what about everyone else who was running some sort of levered operation reliant on Bitcoin to stay above 80K because it was in a super cycle? Like, it may take some time for it to come out, but like, there's bodies from this. And so my preference on the market is to kind of let this unfold itself, because I think it will unfold itself over the next several weeks to months. It may take 3 months, may take 6 months, may take longer. But yeah, that's generally my take, is that, look, guys, there's not a rush to like I don't see a big rush to like FOMO back in and think that, this is going to cause further damage in the market. And I just think you have to be aware of that.
I think also there's different types of traders out there. There's some people that are going to look for value. And once you got into the 60s and the 50s, might have pulled the trigger, and, at least right now, that's a good buy. Then there's other people that, are going to look for confirmation before pulling the trigger. It all depends on time horizon, personal, positions and personal, criteria as far as when they're getting bullish, what their timing looks like. I want to mention something about IBIT here. Aside from, personal trading, there's a real issue with not just IBIT, it's MicroStrategy. It's all of the derivative Bitcoin products. You could even put wrap Bitcoin in here. These don't all correlate to one Bitcoin. People buy IBIT to get exposure to Bitcoin. MicroStrategy people buy to get exposure to Bitcoin, and MicroStrategy has been buying a lot of Bitcoin. But there are more than 21 million Bitcoin out there in circulation. If once you look at the amount of money and the amount of contracts that are being traded, what people are attributing to like 1 Bitcoin equals 1 Bitcoin, IBIT does not equal 1 Bitcoin. MicroStrategy, these are all options, paper, derivatives, and contracts of underlying Bitcoin. And you see more and more of these products come out onto the market. And if the money that went into these products went into Bitcoin itself, we would have gone a lot higher than 125. I'll just say that. And so what that means,
all these DATs as well, et cetera.
All these DATs, all of these derivatives, all of these options. And it just goes to show that there is demand for exposure to this asset.
Yeah, of course.
But we have an inflated supply. And I think people are realizing that these things are not the same.
Yeah. Guys, we've got our next guest for Stabled Up, our episode 20 of our weekly stablecoin show powered by our friends at Frax. We're going to roll into that. We're going to take a quick standby, quick commercial break. Don't go anywhere. If you guys are watching on YouTube, stick around, smash that like, hit the subscribe. We're live every single day. We're going to New York City in less than 3 weeks with one of the best studios, I think, in all of crypto media, covering everything that you want to hear about in neo finance, in crypto, and more. Guys, we'll be right back with our next guest, Michael, the CEO of Liquity, to talk the state of stablecoins in Q1 2026. Be right back.
Yeet is built for big moments, the most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the Stablecoin Supercycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Alrighty, guys, welcome back to Stabled Up, episode number 20, powered by our friends at Frax with FRX USD, Fraxnet, and more of their awesome products. This is our weekly premier stablecoin-focused show for investors interested in neo-finance, in the rise of stablecoins, and in DeFi. We've got Liquity CEO Michael Svoboda. He is a friend of the show, a longtime friend in DeFi since probably 2019. We were all on Liquity back then. They have been very resilient and strong with LUSD, now Bold, and their CDP mechanism, which has been around for some time. Michael, welcome to the show, man. Good to have you.
Thank you, Andy and Robbie. Nice to be back.
Absolutely, man. Since 2019, things have changed a lot. Stable coins in particular have really, just taken the entire market and brought it with it. I'm just curious as far as like maybe the top. Just tell us a little bit about what it was like back in 2019, and give us a bit of the chronology. Like, tell us a little bit about the story about ultimately how we got from 2019 to stable coins in 2026.
Yeah, I mean, Maker was really the pioneer, to pioneer a stable coin on chain, and then Robert, who founded Liquity, saw Maker, was fascinated, and just said, "Hey, I think I can do a stable coin without governance, without interest rates, and with higher loan to value." So he created that. That was the version 1, the LUSD, back in the days, had 5 billion in TVL. And then all started. Then we said all kinds of experiments, also algorithmic stable coins. Everything went crazy. And now I think we see again the consolidation. First, we saw then really this adoption. I mean, stable coins being the DeFi killer use case. And I think now we're entering stage a bit of consolidation. And consolidation, I think, in 2 parts, in the consolidation of the model. So, I think I watch your show and you have so much content on stablecoins, but actually mostly we talk about these regulated TradFi stable coins, the Genius Act kind ones. And I think they will become a commodity. Will be interesting how they differentiate. And there will be a lot. I'm not saying that there will be only two, but I think everybody will gravitate toward that model. And I think something you haven't talked much about and hope we can deep dive today a bit is the other model. So it's like talking about the car with combustion engine, and we haven't talked about the car with the electric engine, having stable coins that are not linked to the banking system. So like the original DAI and Maker, and they are a really tiny fraction, but I think they provide really unique benefits and will also survive in a very decentralized way. So that's my point. I think we'll gravitate to these two models, fully regulated commodity and this purely decentralized. And I think in between, there you have the trust me bro zone. You're adding trust, you're adding a multi-sig, you're adding a yield source, you're making that a hedge fund, you're adding risk on risk on risk, and hopefully you get more yield. But there in between, it gets just more difficult, because then with regulation, what are you doing here? So actually, you probably should be rather regulated. And that's to close the arc. I think until now, we have seen the full range. And I think in the middle, it will clear up and we'll see these two models.
Okay, so we're going to see this bifurcation of these two models. On one hand, I think everyone, because you're right, we've talked about it a lot on this show, this Genius compliant, fully reserved, regulated model, you can think the circles and eventually the tethers will probably get Genius compliant. FRX USD at Frax is also in that regulated bunch. On the other side, I think if we think back before there was a Genius Act, it was DAI, and it was the decentralized stable coins that we were very accustomed to. But if you look at Maker, they've gone from DAI to more focus on SUSD, right, with Sky. So give us, the bull thesis, because combustion to digital or electric feels like, an upgrade. What is the benefit of an unregulated but fully decentralized on-chain stablecoin?
Yeah, so it's a sovereign or a freedom stablecoin. I mean, that's what blockchains are about. If you look at what are these Genius Act compliant stablecoins, they are run by humans, backed by treasury, controlled by nation states. And that's why they need to be regulated. Hey, there are humans in there. Okay, they make mistakes, they are fraudulent, so let's regulate. The other category, the sovereign stablecoins that are only linked to crypto, so no ties to TradFi, are run by code, backed by crypto, and controlled by its users. And what kind of value proposition does this give to you? First, I think there are three dimensions. First of all, you're not being exposed to TradFi risk, counterparty risk, collateral risk, custody risk, operational risk, legal risk, jurisdictional risk, you name it. So you have now really a stablecoin where you can diversify your portfolio with a totally another risk profile, also an uncorrelated yield because it's not coming from treasuries. So that's the first part, not being exposed to TradFi risk. Then the second part is you get more control as a user. So you as a user can instantly mint and redeem. With a lot of stablecoins, you need to be KYC'd, you need to be a business, you're in a queue, yada, yada. You have strong property rights as a user. The stablecoin can't be frozen. There is no blacklist. That's kind of guaranteed. And the mandate in our case, because I think Liquity and Ball is really, that's why I said on the edge how much we can today decentralize the stablecoin. Of course, we could even do more in the future, like Vitalik has outlined, but that's in the future. So we have also an immutable mandate. So you get very strong guarantees that the mandate isn't changed, or that today we make a carry trade strategy and then we form stablecoins. So you get more control. And the last one is better transparency. Everything is on chain, 24/7 verifiability. You have the predictability and peace of mind, because you as a user don't have more information and control than me as a CEO of the company that developed it. So to sum it up, you have really a stablecoin that that acts in the best interest of the user.
Yeah, Michael, I think you raise a great point with regards to the three kind of characteristics here. I think Vitalik just answered to a friend, C-Node, with regards to his tweet about there's no reason to use DeFi unless you have longs on cryptocurrencies and want to access financial services while preserving self-custody. quite a reductionary take. And then he said, in before my USDC yield. That's not DeFi. And Vitalik wrote back and he said, look, would algorithmic stablecoins fall under this? In my opinion, no. Algorithmic stablecoins are genuinely DeFi. He says the easy mode answer is if we had a good ETH-backed algorithmic stablecoin, then even if 99% of liquidity is backed by CDP holders who hold negative algo dollars and separately positive dollars elsewhere, the fact that you have the ability to punt the counterparty risks on the dollars to a market maker is still a big feature. The hard mode answer is even if an algorithmic stablecoin is backed by RWAs, if it is over collateralized and diversified to the extent that it would still be collateralized if any single RWA failed, i.e. if a max share of any individual backing asset is less than the over collateralization ratio, so it's properly balanced, then that's still a meaningful improvement to the risk properties experienced by a holder. He goes on to say that basically putting USDC into Aave gadgets do not qualify under either of my categories. And then you had Stani respond, put SGO into Aave as the right fit. And, people start to show their bags in there and stuff. But talk to us about kind of this, like what is your initial reaction to this from Vitalik and C-Node's USDC yield not being DeFi and this suggestion of kind of RWA collateralized algorithmic stables or general ETH-backed algorithmic stablecoins? I know this kind of flows into your bold product that you have, probably trying to answer this question. What is your reaction to Vitalik's take here?
I mean, in general, I think my point is it's great that we have the options. I also really like Genius Act stablecoins. A PayPal dollar is such a great product because it's much better than your bank deposit. It gives you much stronger guarantee. But what these traditional stablecoins add, which are actually a government market money fund, is DeFi also leverages them, gives them new rails. They have now digital rails, so they are more accessible, and you have the modularity, which is also great, and you can also add then RWAs, you can add transparency. So the whole blockchain layer can add more stuff to it. And I think on the end where Liquity is, I think we are taking to the full extreme as far as we can go to create an Ethereum dollar, which I think Ethereum is a freedom technology. So kind of how can we give as much freedom as possible to stablecoin holders? I think that's then Liquity and Bold. And I think the good point is either arguing what is better or worse is the people now have the option to opt out of the TradFi part and be able to shift the risk. So I think that's really the advantage. And rather than picking on each other, we should just make sure we have these two options. And honestly, the Ethereum dollars, I mean, there are other projects like Curve and others that it's just a too small fraction of the market. So rather, we should really make sure these options are there when we need it. Because again, kind of is a sovereign dollar, but that's not a company coming and delivering that to you. So it's also a bit, freedom always comes with responsibility. And also for the risks, I'm not saying they're risk-free. They have technical risk, they have Oracle risk. So that's why you also need users that use it. But I think the cool part is, and I think that was initially why I get in touch with you. I think it was really cool to see Blue Chip that rates the stablecoins. So Bold was the only one rated A or A minus, but the only one without counterparty risk, playing in the TradFi angle. But again, that makes it great that we say we have two options. Both can be safe depending on what you would like to trust, rather humans and regulation or rather code. And they provide you now options.
So you personally believe that Ethereum and LST backed stables are the more resilient path long term then?
Yeah, I think they are more resilient. I think the traditional stablecoins probably will always bigger. But I think to having a stable-coin that is sovereign, that people can use and nobody can take away, that you have control over, and that provides an alternative to, for example, Genius Act stablecoin is interesting. As you know, the financial system is also a weapon. I mean, you can sanction a journalist because he has an unpopular opinion. And I think that's the ethos of Ethereum. That's why we have this great technology. And if we want to use it to the fullest extent, I think then we are in the world of Liquity and Bold. And if you say, the technology is also great to be used as rails and to modularly piece together, but this still means these are totally traditional products that are just kind of have a digital pointer. If you see it in your e-banking, this government market fund, or on the blockchain, actually isn't that much of a different product. So that's what I want to highlight, just to say that's why I said electric car and combustion engine. It's another thing, but at the beginning, you didn't have kind of all these power stations everywhere to power your electric car, so there were some downsides. But I think it's also important to highlight the optionality, the different risk profile, the uncorrelated yield. And besides the rating that you can say it's equal, for example, Bold performed really well. It had 6 to 8% since you could earn since May last year. Because of the liquidations recently, last 30 days, 8 to 15%. So also the safety, risk profile, kind of you have these options. And I think that's I think that's really an important message, because probably not a lot of people are aware that not every stablecoin, not every dollar is created equally.
Yeah. And with the risk profile, the other side of that coin is going to be the reward profile, right? Which I think is just as important to talk about, because we're seeing this new sort of design space for these yield coins. Now, obviously in DeFi we've had yield for a long time, but I think people were a little bit tired of where the yield came from, emissions. The fees kind of dried up when activity was down. And then also as some of these things scaled, the fees actually dried up, provided less yield. The traditional, Fed and money market rates have something to do with this as well. And so what we're seeing now is this cohort of the USDAIs of the world, the daylights are going into AI. They're providing credit. They're taking that credit. They're giving the interest, and taking it back to shareholders. And in terms of their token holders of this yield coin, same thing where we're seeing companies go into other industries, have real business models, and then take fees from those industries and bring them in, so that we don't need to subsidize yield with token emissions and inflation. And so when we're looking at the risk profile, I think you explained it extremely well. As we think about the reward profile of the two groups of stable coins that you mentioned, are we available? Is the same level of yield and rewards available to us as we're exploring some of these sovereign on-chain stable coins? Or if we keep something that's stable and on-chain, are we foregoing all of these exogenous sources of yield?
Good question. Why do they need to be exogenous? If we have our sovereign stable coins, why can't we have our own DeFi rate? So I can explain you how Bold works and where the fees are coming from.
Sure.
So as a borrower, you can deposit your collateral, ETH, and mint a stable coin, and you pay a borrowing fee. So there you have the borrower. And who's the creditor? Okay, you could say the protocol. The protocol just mints a stable coin, but actually then the stable coin holder who buys the stable coin is the creditor. So what you created is a market. So what Liquity creates is this market. And actually it's peer-to-peer finance. And the only, I think, reasonable thing that needs to happen is the borrower should pay the stablecoin holder, because he gives him the credit or holds the stablecoin until he wants to pay it back directly to him. So what Liquity does, it funnels 100% of the revenue to the stablecoin holders and connects this market. And this is a very sustainable, predictable yield. If Liquity would be big enough, probably the reference rate would appear, because Liquity has also the feature that the borrower sets its own users' own rate. And he, of course, needs to set the rate in a way that people would like to hold the stablecoin. So kind of then this rate gets adjusted. But what I wanted to say, there you have this totally organic, sustainable yield, and you're creating a very efficient market for borrowing and stablecoin yield by just connecting the people. And I think that's what Ethereum is great for. I really love this peer-to-peer finance solution. And again, that's why I think not being regulated is not something bad, because they are directly interacting with each other. So kind of who do you want to regulate? Shouldn't users be able to kind of do their finances like we have done for hundreds of years before banks emerged?
Yeah.
I hear you on that, but like, the answer to why people would want just a basic RWA backed stablecoin like a USDC or USDT is just trust. It's just, this is US Treasuries. You're holding this dollar. It's backed 1-to-1. There can be, like, people have such PTSD of pegs, of stablecoin pegs. You know what I mean?
Yeah, and I understand it. And I'm not saying anything against these Genius Act compliant stablecoins. Like, for example, the Paxos setup is great. It's amazing that you can access this treasury yield in such a safe way. As I said, it's better than every bank, and you should be able to do. And maybe also other products, but these are traditional financial products. So all these things need in place because all these mistakes will be made. That's why I say it's still the trust me bro area.
Yeah.
I mean, traditional products, if they're brought on chain in the normal way, that's great. You get direct access to it. And for people that like to have that access, I think that's cool. And I'm not saying people should shift, for whom are these sovereign stable coins? And I think there are three people that are really self-sovereign individual that say, hey, I want to have control over my dollars. I don't want to be dependent. You have low risk DeFi yield seeker in our case, because you don't have a lot of risk that other protocols with integration with bridges and so have. Say, okay, I'm in DeFi, I want a good risk adjusted yield. And then you have the last point, maybe treasuries that want to do risk diversification. So I don't say shift everything, but maybe say, hey, as a hedge, I have all these same stable coins with the same risk profile, having 5-10% in another risk profile with an uncorrelated yield with other properties and other rights, and maybe a direct ETH backing, could be appealing to more crypto native users. So again, I'm not saying that your mom should hold that. I think that's kind of the traditional products are better, but for this more sophisticated user, I think it could be an interesting play to have this option.
Yeah. I have one quick follow-up on, where this and low risk yield, I think, like you said, 8 to 15% in the high volatility, 6 to 8% is extremely good when we're talking about risk adjusted yield. As we're thinking about, what is possible in this space, I can't help but think that one limitation here is that, if we're lending to some of these, these other sources, and we're looking to drive some interest and yield from those sources, one limitation is the collateral universe, right? Because I think a lot of traditional businesses, be it crypto businesses or fintechs or traditional, industries, are looking more at, they're being lent credit, and a lot of times it's just based on their cap table, right? And their existing balance sheet. Maybe it's against their future cash flows. And so as you're thinking about, someone wants to get credit, maybe they're not interested in having exposure to ETH as their form of collateral. Maybe they have their other assets or their own equity. How much of a limitation do you think this could be to, the sovereign ETH-backed stablecoin complex?
You raise a good point. I mean, these sovereign stablecoins that are fully backed with crypto, they don't grow as easily and in such a scale as the treasury backed. But I think that's also not the goal to outcompete. I think it's really the goal to have these options. And of course, you can also introduce private credit stuff. I mean, these things are all done or hopefully well understood, but need to be managed well. There, sometimes I have my questions mark, because now you have just kind of some people doing traditional business where you just need to understand the risk and manage that properly. I think that's a bit difficult, but if it's managed well, then it's great. Because again, if you bring it on chain, you have the access, you have the composability of these assets, which I think is a great feature. But the other thing not to underestimate, I mean, I outlined the value prop for the users, TradFi risk, more control, transparency, but also for us in the ecosystem. We need to be aware that every time we hold such an endogenous yield source, we are funneling our assets into the TradFi banking to just get the yield. The bull case would be, for example, with sovereign stablecoins and stuff that is backed by crypto. If you just move 5% of the stablecoin supply into these sovereign stablecoins with crypto collateral, we will move 15 billion in collateral on chain again. So that would be the move for our bags.
Yeah. Guys, kind of shifting gears off the types of stable coins, which I think that we've pretty much solidly established on Stabled Up this year and last year, these two different types. Michael, I think you explain it quite well. We've also just seen a really big boom in stablecoin B2B payments. So thinking about things from the state of Q1 2026 and stablecoins, in January, stablecoin transaction volume, according to Artemis, actually surpassed $10 trillion. USDC processed over 8 trillion, Tether around 2 trillion or 1.5 to, and then kind of like the rest around there, just kind of filling in that last couple percent. Guys, that's massive. That's $10 trillion of stablecoin transactions in a single month. What do we think is the reason for this stablecoin transaction volume? Are we seeing just a rise in neobanks in this neo-finance category? Are we seeing more and more payments from B2B perspective? Michael, what is driving stablecoin transaction volume to reach over 10 trillion in January? And what do you expect to be the key drivers of stablecoin transaction volumes throughout the rest of the year?
I think it's a very tricky question, already understanding what happened in 24 and 25, because you only see part of it. I think until now, stablecoins were mostly used in the background, to move money between exchanges, market maker, really a bit an OTC stuff. If you see how much is settled still on Tron. So kind of sometimes I feel we just think we are the main users just moving this money in and out of Coinbase or so. And I think that's not the case yet. It has driven a lot of volume. What I expect, because now a lot of players have the infrastructure in place. For a long time, these players didn't have the infrastructure to receive stable coins and send it. So I think we'll see a lot more of these use cases. And I really like, when I think of the future, I think we have Tether, they're the incumbents. We have USDC, they have also great position, but we already see they need to give away a bit of their yield to Coinbase. And then I think you talked also to Bridge and Stripe. I really like that model. That's what I say, stablecoins are a commodity, and then they give away the yield. So I think, and it's really difficult to say what kind of business model will be possible if people can get the yield. And it's about distribution. We see it with Hyperliquid that gives some of the distribution back. And then you have these players that have huge distribution bases. But then the question is, how will they form it? Maybe, we will see a comeback of the consortium chains, just like we saw Base had just because with its customers such a big base, but everybody doing its chain, it's different. So the next thing would be that big players with big distribution could go together. So I think it's really hard, but I think it's going to be who can make use of this treasury yield as long as it stays quite high. Because it's funneled through from a player like Bridge that just takes a cut, which makes sense. And now I can build a business model on top of it if I get the AUM and so on. And that's I think it's really tough to say. I have no clue, and I expect a lot of innovation and a lot of failure.
Yeah. And what's to say about these stablecoin chains? As we think through ARC and Plasma and Tempo, how do we think that the economics, if we're flowing more stablecoin transactions through those chains and there's collateral there, do you think that because stablecoins are such a significant part of the DeFi ecosystem at this point, do you think that might pull stablecoins off of like some DeFi venues and pull it onto places where more stablecoin volume could take place?
Yeah, I think so. It's maybe something we underestimate. We just think, it will happen on DeFi and it will happen on Ethereum. Why it's happening there? Because they have the customer base there, a lot of people with wallets. But if you roll out wallets to 400 million users, 2 billion users that you have as a user base, it doesn't play a role anymore. And as I said, these are TradFi stable coins. You burn it here, you mint it over there, and they are gone, And with these other chains, the stablecoin chains, they have some interesting features, but at the end, I'm more a product guy. I think you need to have the problem and you need to have the distribution. And it's really a distribution game for stablecoins. And I think who can best position itself and have really a strong use case will just attract the volume. And he can dictate on which chain it will be, because the chains with these traditional stablecoins are really easily exchangeable. you know. As I said, I burned there, I mint there, whoops, stablecoins are gone, because anyway, they are somewhere in a bank, they are not on the chain.
And, you know, I think some people are looking at that and they're thinking it's a feature. They're thinking, oh, well, if I can, you know, if, you know, I'm Iran or Venezuela or like, you know, one of these like sanctioned countries, look at what Tether's doing. It seems like every other week now they're, you know, they're freezing, you know, $500 million of Turkish lira, you know, in Tether, right? And your answer to that is just optionality, right? There's
Yeah, sometimes you have to pay a price also, like freedom of speech, you know,
one man's
privacy,
features, another man's bug.
And if you say you can't avoid that this will be misused, but at the end, I think it's more important that we have these fundamental rights. And of course, you should go after illicit funds and criminal funds and whatnot. And you should have law enforcement, and you should be able to get them. But you shouldn't restrict the 99% of the others of their fundamental rights.
And Michael, as a founder of a stablecoin product, and just as a founder in general, when you see this like big shiny ball, like this massive total addressable market out there, stablecoins as a whole, regulated stablecoins, how do you what is your mental process to think to yourself, I'm going to stick to my roots. I'm going to remain true to like the spirit of this project. And despite what might be a bigger TAM, I'm going to continue to build the project that we set out to build originally.
Hey, it's really the passion that brought me into Ethereum, being able to create this technology, put it into users' hand, being able to roll it out worldwide. You know, it's not so easy for USDC. Just think because you print it on Ethereum, it's rolled out. No, it's regulated in the US, in the EU. So where is it regulated? Where can you redeem? It gets more complicated and complicated. So the simplicity to be able to give this power to users, that's really what drove me into the space, what keeps me in the space. And yeah, that's why the other things, they would be interesting if they say, okay, let's make the fintech play. And of course it makes sense and could be interesting too. But, you know, that really brought me out of the corporate world where so we had the internet that I missed that a bit with my age. And now we have blockchains that fundamentally take out the intermediary, like internet took out the intermediary for media and communication. We can do that for financial intermediary. That's what brought me in. That's what Liquity is doing. And that's why I'm so passionate about it and saying, hey, let's preserve that and let's make users aware that this product exists. Not forcing it on anybody, but just realizing that that's maybe something different. And for some people, it has advantages, or for some people that don't trust certain systems or don't have the privilege to live in certain systems, these can be valuable tools. And that's really having this, you know, I don't know about your job, but having this higher goal, this higher North Star is really an additional bonus. I wouldn't say that I wouldn't do the other job, but it's just kind of, it gives you really this energy to stand up in the morning and say, hey, how cool is that we can build such technology?
Yeah.
Important. Yeah.
Michael, when you're thinking about this kind of evolution with the Genius Act, being passed and soon implemented, as well as the market structure bill, as well as just the general cleansing of a lot of the typical bull market mania stuff that we get each cycle in crypto into a more, you could say more of a slower, more of a mature, sophisticated phase, almost a coming of age of the industry. These two things are happening simultaneously, right? Like the regulation kind of causing the coming of age in its own way. When you're applying that to stablecoins, to on-chain businesses, to generating revenue, cash flows, this entire idea here, how do you see this evolution continuing to play out for stablecoin companies? How are you thinking about how regulation, as well as this coming of age and maturity of forcing on-chain businesses to be the thing that the market wants? How do you see this kind of convergence continuing to play out this year? What are some kind of thoughts that you have from your perspective?
I mean, what I like from the US that they make the regulation better than the EU, which is prohibitive, which honestly also made the stable coins less secure. They need to hold more bank deposits. So I'm saying you also need to be aware regulation is not always to protect the customer. Also the Clarity Act, It's about how do you distribute the interest. What's here in the customer interest? It's in the bank interest, but it's fine. Half of it's kind of regulation to clarify things, but just to outline, hey, this is also a mode, and here it's also kind of protecting the incumbents. So this will happen, but I think it's good. I think it's good that we have these super sound stablecoins we can use, that we have the clarity, that we also see now these players coming in. So we'll see that more and more, that kind of the traditional stuff is allowed on chain and taking advantage of it. And I think it will take a long time, and we underestimate how long it will take, because it's not just tokenizing something and then everything will be easier and you have a business case. These things live all still in the old system. So once we have clarity and we can bring these things natively, if the blockchain is like the primary ledger and not the banking system, then we'll see a lot of advantages. So I see that coming. It will take longer. I think it makes a lot of sense. It will clear up this gray area we have, I think, which is in the benefit of all. But the fear I have is exactly that, the things like electric cars, the people say, no, that's dangerous and we should disallow it, or, oh, they are self-driving. We're a self-driving credit facility that people say that's very dangerous, and kind of restrict this peer-to-peer finance area. And just because you want to regulate everything. And I think that's my biggest fear, that people don't understand it, just see it as a danger or afraid of it, and that we lose the niche we have and the freedom we have in DeFi. But that's not only the regulatory kind of issue or fault. I think we also, as an industry, need to have higher standards, from like a self-disclosure practice, and just say, hey, we're doing that in our best interest, and we're a good example. And this technology in that way should have its merits, and people should be able to build and use it freely outside of a regulated perimeter, or just in a different regulation, like product regulation. Okay, you look, is that product safe? Is the security good? But not, do we need an intermediary to regulate if there is no intermediary?
Yeah, man. I mean, I think this entire new era of crypto, like what's happening is we're testing the bounds of the censorship resistance, the libertarianism, the immutability properties, all of these, while converging deeply with the legacy finance world. And there's some line that is being walked right now where there's adoption into institutional interest, allocation into the market, while also not foregoing what we've kind of came here to build. And I think that line tends to swing in both directions as different events unfold and as different market kind of transitions happen. But it does seem like right now it's a necessary evil to collaborate and to build with these large scale firms in order to get to the next phase. Like, for example, like having the ability to trade tokenized equities on chain is like a really nice thing to do, because it then is like the step to getting people to then come on chain to trade their equities 24/7. It's like having these, stable coins that are backed by USDT, or sorry, by treasuries, et cetera. This is like perhaps the step to get us to where you want to be in the future, right? And so it's kind of hard to get excited about this middle ground, because it's like, we didn't really come here to tokenize dollars and stocks and call it like in industry. We came here to create new asset class and to create a new financial system. But it's very clear to me that there's this intermediate step happening right now, which is of the utmost importance, which is like basically doing the tokenization of a lot of off-chain assets, as well as like facilitating a lot of that kind of gray line or gray area in between, legacy finance and DeFi. And so, Michael, I feel like that's where we're at right now as an industry. And I feel like it's up to the activists to continue to, push forward their agenda. And I think the institutions are going to be pushing their agenda. It's almost like a David versus Goliath.
And there's a new arena. As you said, it's an evolution. And honestly, I think it's great also that traditional players are coming in, because the evolution is, we had banking. No, you had just your bank, and then you were kind of captured in your bank. And then we had open banking. Oh, suddenly you could access, fintechs could access your bank. Mm-hmm. And now we will have open finance on this ledger, and being able to piece all these things together. And I think this in its own will be really great. And we are just at the beginning. Yeah. So really excited about it.
And stable coins are the wedge and the Trojan horse. Michael, man, really appreciate you coming on. It's a pleasure. I mean, you've been building since 2019, and so we should do this a little bit more often than every 5 years.
Yeah, sure. Happy to do that. Hey, it was great to meet
Thanks,
you again.
Michael.
We'll see you next time, man.
Good
Thanks
to
for
see you
coming on.
guys. And thanks, guys, for being part
Thanks.
of episode 20 of Stabled Up, presented by our friends at Frax. We'll take a quick commercial break.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI. I don't know where Rob's at. Alrighty, guys. Check this out. So I think that our guys at Tempo are literally building what I would consider the Avengers of crypto. I mean, I've never really seen a team like this. They've got Dankrad, they've got Dan Romero, they've got Georgios from Paradigm, they've got the guy that hosts that podcast, Simon Taylor. I think he's like the fintech guy. They have an insane team. This is nuts. They just continue to poach talent. Dan Romero, founder, recently sold Farcaster, joined Stripe and Paradigm-backed stablecoin chain Tempo. I mean, this is the biggest competitor to Plasma. Plasma is a portfolio company of Good Idea Ventures, our fund. And yeah, I mean, this is a massive win for Tempo. I don't really know what to say. I mean, this is just that they got Dan from Farcaster is nuts. This guy's a massive following. He has experience in product design and building products. I mean, this is just huge. I mean, Tempo hasn't even launched yet, but they've got just a huge product suite coming in, and their team is just dominant. I just looking at stable and plasma launches, the stablecoin chain market is just like any other market. Like they're not like they're remiss from the rest of the dumpage across all different altcoin across the entire altcoin complex. But I do think that Tempo has a really good chance to be like the leading, I don't know, you could call it like fintech chain or like kind of like web Web 2.5 chain. So yeah, I mean, congrats to Dan. Pretty sick. I mean, Tempo is probably the biggest chain launch that's not yet launched. After MegaETH launched today, I think Tempo and Arc probably go head to head right now. Circle is obviously building Arc, Stripe and Paradigm are obviously building Tempo. And so, yeah, I mean, I'm pretty excited for what they're doing here. And I just think that like they're kind of building out an all-star team, and they're now going to be able to attract so much talent that is like really, really compelling. And Paradigm is just a different beast of a force as well. So yeah, I'd be pretty bullish on this if I was an investor in Tempo. I think this is going to bring a lot of excitement to the market again. I just don't know like how the crypto community is going to get upside and exposure in Tempo. Like I worry that it's going to be one of those things where it's really bullish for a lot of the excitement for the early investors, for Paradigm and Stripe, of course, but that either they don't launch a token for a long time, or they do launch a token and we still have that same token equity dynamic where there's not really a clear cut answer. Maybe they get around that. I mean, I would hope so. I think at this point you kind of have to from the token launch perspective. But I just worry that they might just launch at a massive FDV and basically get not a whole lot for the people that are excited about it and the people that were supporting it early on, or just like general folks like you and I who want to get exposure to this stuff, right? Like we were fortunate to get the investment opportunity in Plasma. That has performed well. I don't know really about Tempo. So not sure how we're going to get upside on that, guys, but we're going to figure it out one way or another. Let's move on to the next one. We got X stocks. We got Kraken. Rob's back. You can benefit from Chainlink. Yes, you can. Chainlink was one of the best launched companies back in the day, but right now, like any other project, it is on a public purchase basis. Anyway, X stocks, it's time to upgrade the market. They will buy Chainlink Dons for CCIP data compliance. Yeah, of course they will. Of course they will. X stocks on Solana. This is how tokenized equities are meant to be. Deeper lending markets, yield on your X stocks, and more. Built for builders, designed for everyone. X stocks. Powered by Kraken, powered by Backed. Yeah, I mean, guys, X stocks are expanding to basically get into DeFi now. Like, so now you see that they're all in all the apps that you use, new utility, but now you can actually use them in Camino to actually get to lend out your tokenized equities, borrow against them, loop them. So this is kind of like the big, it's kind of like the big next step for RWAs on chain for tokenization. Right now, it's like really cool. You can like, go deposit some money into a money market fund and get access to yields from offshore, CLOs or from off-chain CLOs, from money market funds. But the next phase is actually putting them into DeFi, keeping that off-chain yield and then getting deeper on-chain yields and better on-chain yields. So I think that's kind of where Plume's focused. I think Plume's pretty competitive with Camino here in X stocks. And so I think this is like that next stage for tokenization is actually getting yields on-chain from off-chain assets.
And it's not just about yield. Like, people might be wondering, how does this help, quote unquote, my bags? Now, let me attempt to answer that question. People take, let's say people are trading equities, right? And let's say instead of trading on their brokerage, they're trading on chain and they're trading tokenized equities. Okay. If those equities are composable with DeFi, I can deposit something like an Apple stock or a Google stock that I want to retain exposure to, and I can borrow stablecoins against it. I can then take those stablecoins and I can do anything under the world with those stablecoins, including buy, quote unquote, your bags. So I think when we think about what bringing these out, and people are pissed off because they're thinking, hey, like, how does this really help me, right? Like, they are launching these tokenized equities. Maybe they're doing so on a different chain. How does this end up helping me? Well, once they start, it's all about unlocking capital and credit creation. And I think DeFi is really, really great at creating credit for the tokenized economy, meaning that I can deposit collateral, no matter the form. In this case, take tokenized equities as the form of collateral. I can borrow stablecoins, and now there's more stablecoins in circulation for everyone's bags. Go buy crypto, go buy equities, go buy gold, go buy anything you want under the sun on chain. And you can do so because you now have greater composability between these forms of collateral.
Right, is like we got a lot of tokenized assets on chain, and now it's like, okay, now why don't we just actually bring them into DeFi and provide more yields, and get better assets on chain? So this is like my logical next step, right? It's like, okay, we tokenize the assets, then we bring them on chain, we get these assets on chain into DeFi yields. We show these institutional allocators that there are far better yields on chain to get on your equities. Like, imagine somebody telling you you're going to get a yield on your S&P 500 holdings. So you're holding the S&P and you're actually getting yield from it, not just like holding the S&P. It's kind of like a breakthrough moment for investors who are looking for yields, because most investors are. So that's kind of what I'm excited about, guys. Shout out to Xtalks. Let's keep it moving. I think the next headline is part of our N7 thesis here, and part of kind of where outperformance is happening in the market, which is Sky. Sky Protocol has executed $1.9 million of USDS in Sky buybacks last week, acquiring 31 million Sky. Cumulative buybacks have surpassed 108 million USDS in buybacks. So you can see the weekly update here from the team. It shows you the weekly buybacks. And so, the week of January 19th or 18th, we got 102 million. And then you see so they're doing $2 million a week of buybacks. It's quite notable. Hyperliquid is doing, a couple $1 million a day of buybacks, but is also trading at about 25x or 20x the multiple ish of Sky's market cap, fully FDV, fully diluted valuation. Sky is a big part of the N7 bucket that is leading right now. Guys, we're going to be releasing that dashboard for the public very soon. And we've been kind of getting feedback, testing it out. But I mean, this is like pretty insane. The token is also outperforming pretty much any other altcoin except for Hyperliquid in the market, and Canton, which are also part of our N7 index. So what's cool about what's happening right now is that our thesis on Neo Finance is actually outperforming the market within all of a month of launching it. So we're pretty excited about that. And we think it's going to continue to do well. Hyperliquid, Sky, Maple, Canton, EtherFi, Aave, Morpho, even Pendle, even though they have quite a bit of investor overhang still, these assets are outperforming. And then you've got kind of other Neo Finance assets that aren't doing as well, but we expect to get, eventually we'll bring them in or swap different ones into our index as our thesis changes. But maybe we'll be able to launch a vault for this index and for this thesis, yet to be seen. But shout out to Sky.
Shout out to Sky. I don't have a whole lot to add. I believe in Sky. I think they're doing great. I think we're going to get Rune on another time very soon. And I like the buybacks that are happening here. I think Sky's one of the few business-driven projects out there, and they've already got plenty of product market fit. So I think among crypto tokens, they're shining because they have a business. And even amongst the tokens that do have businesses, they're one of the few that is continuing to grow.
Most definitely. All right, guys, I think we got just one last one before we roll over into our intense day special. Why don't we just take a quick commercial break and get those guys set up, get them ready, and roll into our last part of the show today with Ellie, Illia, Joel, and potentially Merge. See you guys in just a sec.
Yeet is built for big moments, the most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private. Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show.
Building Ironclaw, which is the privacy protecting OpenClaw.
There we go.
You just
Ironclaw is coming live.
announced it live.
Guys, AI
Fucker and
Supercycle
marketing
episode
team.
number 20. Welcome back to our show, our weekly AI show, powered by our friends at Near. Today, we're talking about the future of agents, privacy, and intents on chain. We've got Illia from Near, we've got Joel of Dash, and we'll soon have Ellie from Starknet breaking down the latest and greatest in the space. Illia, Joel, welcome, guys.
Thanks for having me.
I think, Illia, what you said at the top of the show is a great place to start. We had George on last week. He ran us through the entire chronology of ClaudeBot to MoltBot to OpenClaw. OpenClaw had a ton of security vectors that people were starting to exploit API keys as a result of hooking these things up to open source software. George took us all the way through, but there's been even more development since our episode last week. Could you just now introducing Ironclaw?
Ironclaw.
What is
Yeah.
Ironclaw?
So I mean, as you said, right, there's I think Kevin Owaki, right, posted that it took 2 or 3 days for his effectively all the credentials to leak from his agent running. We are kind of the AI people are learning about the dark forest of internet in a hard way. That if you if you open up your system, then there will be attackers. The good thing is in blockchain, we've been living in this world since the beginning, and so we have experience dealing with this. And so yeah, one of the things that I kind of been prototyping, and we have few more people starting to contribute now, is all right. Well, if we take the blockchain mindset, if we take this adversarial mindset, how would you design a system that's still able to do effectively anything on your behalf? And so that's the idea behind Ironclaw. It's effectively a agentic harness that is designed for security, meaning all the credentials never touch LLM or tools. Like they effectively isolated, they are domain bound. So your Ironclaw will never give credentials to a domain that this credential doesn't belong to, right? If you have your Telegram ID, it's never gonna go to a non-telegram.com domain, right? Simple things like that, but effectively avoiding a whole slew of security issues. Similarly, if you're running arbitrary code, it should run in Sandbox. And if you're running tools, they should be running in a virtualized environment. So it uses WebAssembly, which is what Near uses for smart contracts. Effectively, every tool becomes, you can think of as smart contract. All the credentials management is isolated. This is our, think of it as chain signatures, like control plane that we use on Near Intents already. So it really, like, in many ways mimics what we've been building with Near blockchain, Near Intents, Near chain signatures on the AI stack. And then it uses our Near AI private inference, confidential inference, and anonymized inference if you want to use Opus, OpenAI, etc. as well. So it kind of has this full stack together, ensures privacy, ensures security. Obviously, still a lot of work, right? It's it's only been like 4 or 5 days of development, but it's pretty exciting. And the idea is to get it to a level where it can build its own tools, kind of as quick as anyone can prompt it with requests.
Yeah. Yes. And Illia, just to really put this into perspective, last week George was telling us about how we can run using Near, we can run OpenClaw, which is the open source Claude bot implementation. We can run it in a TEE using Near, and we can use private inference, which is part of what you guys built with this private chat Near AI product. Tell us, like, what is the step function from not just OpenClaw in a TEE using Near AI, like the step function that takes us to Ironclaw?
So the kind of what we've released, I guess top of the beginning of the last week, these things are moving quick, was, hey, you can take OpenClaw, which is this open source framework, you can host it inside the secure environment, which means we cannot see what's going on there, right? Only the kind of users that started it. So effectively, this is user-owned AI. This is your AI. And you use kind of private inference, so there's nobody can actually access, stop, etc. How you're using AI. Now, the challenge is OpenClaw itself, as we've seen, has a lot of issues, security vulnerabilities, prompt injections, etc. And so Ironclaw really levels up that to now you can trust this AI to effectively not leak your data, to be on your side, right? And that's kind of what we've been trying to bring together to market as user-owned AI, is really AI you can trust to be on your side, not be on somebody else's side, right? Or be susceptible to manipulations. And so think of it as your guardian angel in the digital space.
I think we're gonna get Illia up here, Ellie up here now. Welcome, Ellie. I was explaining the idea of prompt injections to a friend yesterday who was kind of getting involved in AI. He took a break from e-commerce and started to get involved, and I was explaining how that works through OpenClaw and the functionality capabilities, and he was pretty blown away. But again, Illia, as you mentioned, we're used to it, right? You don't put your seed phrase in places in blockchain. You don't click on links, but that's starting to kind of come about. So let's get into some of the privacy conversation. Ellie, welcome to the show. Joel, obviously here as well, guys. Big activists in the privacy space, ZK, Starks, Dash, etc. Guys, how do you think about this last week in the agentic world on chain with regards to privacy? How are you thinking about this evolution of agentic commerce as it pertains to this Claude bot, Near's Ironclaw, and just building out agentic systems on chain where there's a clear product market fit? But there's this massive, massive gap here in, the user ownership capability as well as the privacy of user data. How do you all think about the current problem space as it exists? Maybe Ellie, you can start.
I would say that everything related to AI, if you think about AI, blockchain, and ZK, then at least to me, it's just trying to drink from a fire hose. There's so much going on. Every week that passes, there's new capabilities. I myself, Illia is of course one of the OGs, inventors of the technology that underpins AI, so he probably understands this way better than I do. I'm just a a very late oncomer consumer, but there's tremendous opportunity to be had here. Blockchain is extremely well suited for AI and agentic because you don't have KYC, you don't need the people to sign off on stuff. So there's a lot of opportunity, and of course, just like when people transact, also when you have your agent transacting, you probably want to have privacy alongside good functionality, high security. This will emerge, but we're in very exciting early days of this. That's as much as I can say.
I think one thing to keep in mind as we're taking the blockchain elements and the financial elements and the AI elements and kind of putting them all together is what the agentic economy looks like as it operates on chain, and why blockchain is the proper fit for an agentic economy. Illia, I think last week it was already possible to connect OpenClaw to near intent. And so that gives these OpenClaw implementations sort of a multi-chain capacity. Tell us a little bit about how you see the agentic economy evolving and why blockchain is so important for the agentic economy.
Yeah, for sure. I mean, I think definitely doubling down on what Ali said, right? These agents, they need an easy API to access everything, and existing banking, existing commercial relationships. Imagine this agent negotiating contracts over email, right? That's probably not the most effective way for their operations. So actually, last week as well, we launched Agentic Marketplace. So this is really building on the idea of intents. This is actually something we talked about at Redacted around DEF CON in 24, where the idea is actually the intent is really the outcome you want to achieve, right? And so you can say like, hey, I want this website to be built, or I want this field to be seeded, or I want this building to be constructed, and you can send it to this like intent engine, right? Order matching book. And then other agents can come in and say, cool, I'll actually do it for this much. It will take this long. Here's the requirements. Here's the conditions. Here's, maybe some qualifiers. And so you can actually have this agreement, have the funds escrowed, do the construction, do the seeding, do the work, and then resolve it, right? And so we launched effectively the alpha version of this agentic marketplace. It works with, Cloud Code, OpenClaw, Codex, and similar frameworks. You literally just paste the skill of the marketplace, and your agent now knows how to post jobs and how to do jobs. It all runs on blockchain because you need escrow. You need the ability to easily kind of come into these financial commercial agreements. And so that's really kind of the manifestation of this idea that for agents, this is the easiest way to do commerce. And we already saw we have like 1.8K jobs posted, or 1.9K. There's 82 agents in like this few days. People are like posting, bidding. There's more features coming. So really excited to see this kind of starting to pick up. And kind of we see this as like, hey, they actually don't care about using dollars. So they're using Near as a currency because it's easier. But users can deposit any currency through Near intents as a way to really accept anything into it. So kind of agentic economy really, starting to take place because this model's just gotten so much better at understanding context and getting things done. And then you can imagine your agent running there and then comes to you and says like, hey, you person needs to go and do this job because I signed up for it. And we got to get paid this much. So I think they're going to be an interesting, exciting, like, what TaskRabbit and similar kind of products, gig economies before, like we're actually going to see this expanding a lot more, where literally a construction company will receive an email from an agent saying, hey, how much would it take to actually build something? Let's get, I have already contracts. It will set it up and then we'll, satisfy it on the agent marketplace.
Yeah. It's very funny. The first conference that Andy and I went to, it was in DC, and they were talking about blockchain a lot. And there was a hackathon, and we came up with this idea of essentially a place where there was this democratized network of contributors, and you could bid on like a local person fixing something, or a national person entity to end up filling this bid. we didn't know it was intense at the time. We just kind of thought like, okay, this is the right way to structure work. You wouldn't have some, contractor at a national level fixing a pothole on the street that you fix it, you go over every day. And so we're seeing things emerge both locally and globally. And this has created this like massive security vector of privacy to potentially exploit, these API keys. Joel, I want to loop you in here, both on the agentic side as well as on the financial side, privacy has become a pillar. Just talk to us about how you think privacy is going to continue to shape. Illia's done work now on Ironclaw to kind of protect more of these APIs, but do you see any more holes? Like, where should we be focusing from a privacy point of view?
That's an interesting question, and there's no real good answer other than everywhere, right? Because I think that we really underestimate just how much data leakage happens in our day-to-day kind of commercial, just the average person in their day-to-day online activity. Now, if you start adding an agent that kind of goes wild with your private information and doesn't necessarily have that same privacy mindset as you might have, then there's a whole lot of extra things you need to sort of like block off there to make sure it doesn't just, divulge just about everything out there. And I think that one of those things, like blockchain is a perfect marriage for the agentic world, of course, because you don't have this whole, banking personhood, KYC kind of bottleneck behind everything. It's just digital cash for the new age that just works. Now, unfortunately, most cryptocurrencies over the entire history of the space have had massive privacy issues, combined with the fact that everything is on a very public, easily accessible blockchain database where you can just sort of look up everything and find out statistical patterns. And so it's basically a data mine dream / nightmare, depending on who you're thinking is looking at this, that's just sort of out there to be harvested, especially as AI models get a lot better at being able to just sift through this data, find kind of maybe make Google blush from data collection standpoint. So it is something that as we start to move this into our lives, as we start to give agents a lot more ability to make purchases and other activities on our behalf, we're really going to have to focus in on how to make sure it all stays private. Otherwise, we could have a very nasty situation where massive amounts of personal data is just out there for not just the data giants, but like anyone who'd want to kind of harvest and exploit.
Yeah. Elliot, I'm curious from the Starknet and Starkware perspective, how you guys are thinking about agentic commerce on chain, right? So I think that you guys have a very highly performant chain, and we're expecting agent to agent payments probably next year. I think we're getting close right now with this kind of Clawbot implementation, but this idea of agentic commerce actually happening on chain at scale. I'm curious, like what you think the requirements are for a blockchain to actually enable that, and just like generally how you're thinking about transitioning from mostly humans interacting on Starknet to actually mostly agentic entities operating on chain.
Right. So that's a terrific question. I'll say that right now, it's just very, very first step. So it's even hard for us to agree on what's going to happen. Initially, I think what's already happening is that more and more of our, let's say, economic and financial agency will move over to, AI and bots, and we'll have bots, let's say, investing on our behalf and stuff like that. From the point of view of blockchain, then, because blockchain doesn't really separate between humans and, and bots, it's all, as long as you have wallets with keys. So there, I think that what's going to matter is you want a lot of like good DeFi and investment opportunities along with high throughput and, low costs. So in that sense, I think obviously Starknet is one of the best things for that, but there'll be others as well. Down the line, I think an interesting thing that will start to emerge is you would want agents to be proving various things about their reasoning, the way they use the models. You want integrity in the things that they're doing. And then we'll see another wave of applications in which blockchains are used to enforce integrity. on agents running. So, for instance, if my bot invests alongside your bot, I would like to know that the investments are based on you following the model that you have, which may be proprietary. So that's another line of applications that we'll probably see emerging on Starknet. But the I think that at least initially, basically, from the point of view of blockchain, there is no difference between humans and AI. So as long as you are comfortable entrusting your AI with your keys and your funds, we'll just see this activity emerging on Starknet and then on other blockchains as well. But again, I would defer to Illia, who certainly a bigger expert than me on this thing. I will just mention this, that I think, first of all, Near are trailblazing and one of the best projects there, and have embraced AI for blockchain probably before anyone else. We're very happy with our collaboration with them. Now you can basically do a whole bunch of things connecting between Zcash, Solana, Near, and Starknet, or you can bridge over assets, speaking or talking to your Near based agents, and that's a lovely collaboration that I'm very proud of. So thank you, Illia and the team, for making this happen.
Yeah, Illia, anything to add there as far as kind of specs for chains, how this kind of embracing of agentic users, if you will, or entities will come in?
Yeah, I mean, just completely agree. The idea with what we were building with Intense was like, how do we enable all of those chains to be easily usable by agents, right? And then it kind of was as a side effect, it made it easier for humans. Yeah, I mean, it's already exciting to see. I mean, as Ellie mentioned, right, like there's a ton of collaborations happening, really enabling kind of easy way for people to move around, to interface with assets, and then now kind of deeper applications. We have quite a few things like lined up actually for NearCon in a couple of weeks on this as well. But indeed, it's like as people, like, I think like DeFi historically being like a very niche thing because it's very complicated. And sometimes it almost felt like people wanted to be complicated because, like there's in crypto, there's like tribalism that, we want people to stay here, to be here, to commit to this complexity. Like the farming was a thing, right? It's like you needed to put effort to make money. And I think the agents are going to make it easier and easier, where it's like, it's proactive, it's able to help you execute these actions. And, we with chain abstraction, we're really kind of creating tools to make that happen easily and create a control plane to coordinate that. And so, yeah, I think it's going to be just accelerating from here. Like all the tools.
Yeah, Illia, do you think agents will care about the chain? Like, do you think chain abstraction becomes more real with agentic entities?
I think so. Yeah. I mean, what agents need is really simple API to access everything, right? They don't you don't want to pollute your context with like a lot of complex stuff as well. So you want simple API and you want to access everything. So I think for agents, chain abstraction is because they don't have like a tribalism, like, hey, I have bags in whatever, so I'm going to use that wallet or something, right? They're just going to be like, cool, I need an easy API that, I don't need to like calculate gas prices in like volatile currencies on different chains at all times and pre-bridge stuff, right? And so that's really what, again, Near Intense were kind of designed for from the start.
And I just a broader comment about, AI generally is not just chain abstraction, but they're like software abstractions as well. Like the AI agent, like it's not going to go on different chains. It's not really going to care. It's also not going to, really care about hopping from this SaaS platform to that SaaS platform, as long as it has access to the two. The agent becomes the level of abstraction where all the action happens. Illia, I'm just curious, like where you think we go from here, even if you don't want to give away more than Near roadmap, like just conceptually, what are some of the developments that you think we should be prepared for?
Yeah, I mean, I think we already see the market is starting to reprice SaaS, right? So like to what you just described is people don't expect the SaaS to be priced the same way. The software itself, I mean, honestly, like the amount of the amount of features and capabilities you can launch now is just accelerating. And so I think they're going to be like a kind of a split where some people who are really harvesting this agentic kind of ecosystem and doing it well, and there's some people who are either afraid, cannot, etc. And so I think that split is also going to start becoming like very visible on like kind of market cap, whatever, and even GDP potentially of countries. And so I think that would be a pretty fundamental split. But at the same time, again, I think the whole point of this outcome based economy, I think we're going to see a lot of the I call it middlemen. Like a lot of the businesses are there because they're effectively just repackaging something. Like they're kind of making, hey, we're gonna order a bunch of stuff from China, put it in this warehouse, and then somebody else will like buy it from us and put it in Walmart, etc. Like a lot of this will start disappearing because your agents can go directly, right? They can go scan of every Chinese factory. It has a Chinese model, it can speak Chinese perfectly, right? And so it can get all of that negotiation done. It can literally email and have the email conversation with the, and it will be a purchasing agent on the other side, which may be a human right now, but it will be AI, tomorrow. So I think we'll see a lot of this like transformation happening across the board. And yeah, I mean, we're here for it. We've been building the infrastructure for this for the past, since we started near to, but yeah, excited to see all of this coming together. And as you see, it's moving fast.
Anything to add there, Joel?
Yeah, pretty much. It's going to be very fascinating to see as we have this big like transfer over to the way the new world is going here. I think that crypto's been around for 17 years or so now, and still very few people on the grand scheme of things even use it. And before you know it, a large part of the economy is going to be just radically different. Like our parents or grandparents, the kinds of money they use, the kinds of ways they purchased, all that is going to be completely different. And I think there's a whole new, what I would just say is we have to embrace the future here, but also be prepared for a bumpy kind of ride as we run into a lot of issues we never ever dreamed of having, even today, or definitely 5, 10, 20 years ago, that we're going to start to run into. And, of course, there will be lots of FUD and things about, oh my gosh, privacy leak, or this rogue agent went out and just like bought up all the ground meat supply and sent it to a different country, and now there's a massive supply issue. There will be things like that along the way that we just have to make sure to really insulate ourselves for. But it's one of those things where if we're not kind of ready, we're not ready to, for example, safeguard our privacy and our own self custody, etc. today, that it's going to be very rough for us maybe as individuals in the future. And I would just sort of leave in that I think that self custody is obviously the underpinning of all of crypto, and at the same time, custody solutions are nowhere near where they need to be for this level of importance in our lives. For like a digital cash wallet, maybe they are, but if it's like your identity system, all your money, all your authentication that goes into all your army of agents, the recovery mechanisms for that, the security mechanisms are kind of like nascent. They're not really where they need to be right now. And that's something that I think that we really need to start figuring out and standardizing across the whole space over the next couple of years.
A quick question on that is Ironclaw ready to confidentially handle a private key? We can't hear you.
Give it another week. I mean, we're working toward it, and we'll give you a one-click button to get it started and interact with it. So, yeah, I think a week is totally reasonable. These things are moving so quickly. That's a very, very reasonable pace to ship. Another question here, definitely more broad, and I'm actually curious if it's even relevant, but I figured here's the place to ask. Obviously Bitcoin took a tumble. There's a variety of different reasons why, but one of them is just growing fears around quantum. I think people might be thinking that because AI is accelerating at the pace that it is, AI will help us reach quantum sooner.
is there any credence to this claim? Do you guys do you also see quantum as a looming thing? How relevant should we be taking this concern when it comes to the financial aspects of this now?
Okay, I'll try to answer this. So yeah, quantum is looming in two ways. One is we'll see more, people are predicting there'll be more progress on this. Whether AI helps or not, I think it's just like with all of science, right? Because right now the problem is not so much with the fundamentals of quantum mechanics, it's this engineering problem of can we, make it happen with all the error correction and noise reduction and stuff like that. So AI will help the same way it helps all of physics and computer science and biology and whatever. But the more imminent thing looming from quantum is basically, can crypto adapt fast enough? Because and here I think a lot of eyes are on Bitcoin, but others as well. Can Ethereum basically, can we get our shit together quickly
Right.
enough to make the changes needed or to have a plan for a plan? And I think the only way we can have the public sleep, rest assured that everything's fine, is if we actually show that we are doing a lot of stuff about it. So I get, ZK Starks happen to be post-quantum secure, and Starknet is post-quantum secure, and we are making steps to make sure that, we have enough primitives in place that folks can basically adapt their wallets to it. But I'm very concerned about, Bitcoin, to a lesser extent Ethereum, but also this is something we need to address very seriously. Yeah.
Ellie, quick follow-up on that, and at a high level, maybe, just concise if possible. How do you make something quantum, like post-quantum secure?
It's very easy. You throw away the number theoretic constructions. So they're very convenient because they have very short keys. They're not that efficient in terms of computation. So you have to get rid of things like RSA, elliptic curve cryptography, Diffie-Hellman, and you replace them with things based on, mostly on hashes. So ZK Starks are an example of that, and you have a bunch of signature schemes. There are other variants that use lattices, but you just replace everything with hashes, which you can. So that's roughly it. You throw away the number theoretic stuff, like RSA, you bring in hash-based stuff, and there are a bunch of constructions. It's really just a matter of, implementing all of this, making the wallets, the ledgers, the hardware wallet, the protocols accept these things. Just one more word on this. So, on Starknet, all accounts, we have native account abstraction, which means, you can basically pick whatever signing method you want. With things like Bitcoin and Ethereum, it's more complicated because you have like enshrined cryptographic protocols that need to be kicked out and replaced. So it's a bit more tricky, but that's my concern.
Got it. Appreciate that.
Joel, anything to add there on the quantum side?
Yeah. Obviously, this is not my personal area of expertise, so take anything I say with a grain of salt. But from all that I've heard of, it seems like it's one of those big things looming over the space where I haven't heard expert consensus on exactly how soon or how far out this is. There's a lot of people saying, it's 20 plus years. Some people saying 3 years, and to where it becomes an actual threat. And so it's also one of those things where I have heard of some post-quantum cryptographic schemes being kind of broken through more traditional means as well. So it's definitely one of those things where getting it right and getting it at the right time is an incredibly tricky thing sort of to do, as well as a lot of to speak of Bitcoin in particular, I do feel very, I guess, nervous about Bitcoin in this case, because one thing is when you change cryptographic schemes, sometimes you end up having to incur a much higher like data cost as far as is concerned. And Bitcoin did never increase the block size past 1 base megabyte. And how are you going to upgrade to a post-quantum cryptographic scheme? And then how are you going to manage that as a community, just from a political standpoint, not even from a technical standpoint of like, how are you going to say, well, now we're going to do so much extra data on chain because we have to. And then, well, do we then restrict the block size to like 300 kilobytes? Like what do we do? It's going to be, especially for cryptocurrencies like mostly Bitcoin, I should say, which have sort of made a career of decades out of not changing, out of not doing anything significant. This is one of the most significant changes that's going to happen. And just how are you going to handle just being in like establish consensus quickly mode, figure things out, move quickly on things, and move decisively and upgrade? And then what else is going to be upgraded at the same time? It's going to be a very uncertain time.
Yeah, it's almost like ossification as a business strategy, which I know that Ellie is, I'm not sure as much of a fan of as other Bitcoiners are. But guys, let's close out here with something around the X402 conversation. Illia, I'm curious to get your perspective on this idea of internet native micropayments. I think this is another really, really interesting and fascinating area where blockchain and crypto rails become a non-negotiable for the future of agentic payments. Where are we at with the state of these standards like X402, and kind of what do you see as the path to getting to internet native micropayments? And then I'm curious to hear from Ellie as well before he goes, and then we can close out here.
Yeah, I mean, X402 was proposed, I think, mid last year. We were one of the launch partners as well. And it totally makes sense that if you're using APIs, right now, some human needs to go sign up on some website, add a credit card, get API key, then give it to agent, and then agent goes, nuts. But then it's also like the agent itself doesn't see the bill properly. It's not able to monitor and manage that. And so if agent marketplace is able to make money, it cannot actually use this money to pay for its APIs that it uses as a consumer. So it totally makes sense that like you want to have, the same account agent is able to pay and earn. It's able to pay for APIs, including for its own inference and other things. Now, 402, for those who are not familiar, was originally an HTTP spec, right, back in 90 something. And so it just was never implemented, was never used. It was literally payment required kind of code that never was used by anyone. And so the idea was like, hey, why don't we use that actually for real, create a specification around it, and now people are able to pay for things directly HTTP request. Now, there is some, I would say, like, there's a lot to be built to make this protocol truly useful. There's things like session keys, etc., that are missing right now. It's actually like every request requires kind of payment, and so lots of work is being done across the ecosystem to improve that. But I think fundamentally the idea that, hey, the agents should be able to sign up and use things without needing to, call up a human to do this, right, totally makes sense. And crypto is the only way to actually facilitate that. And on top of this, like crypto, again, this is where we figured out how to do Sybil resistance and other kind of conceptual things that, for example, Maltbook right now is dealing with, right? Somebody just went and created 1 million agents, like, with a single script, because they haven't really thought about like what is a Sybil resistance here, what is like identity solution for the agents, etc. So all of this is like, yeah, I mean, I think again, I see agents right now just like hitting all of the things that crypto been thinking about, and the only real challenge is that crypto has such a bad reputation. And honestly, all of the stuff that's happening on the internet right now is not helping, right? Everybody's launching the meme tokens and then, dropping them on creator and then telling creator, why did he rename the project? They lost the money. It's like all of that is not honestly helping with this. But I think like we kind of need to really like punch through that and deliver real value to the kind of developers and users, and that will prevail.
Yeah, Ellie, on internet native micropayments.
So I think this new standard is really, really good for those networks that don't have native account abstraction and things like Paymaster. Luckily on Starknet, we have both. So, it's like agents can basically go on right now. You can use Paymaster to have others pay for them if you want that. You have native account abstraction, which, I mentioned solves for both post-quantum security, but also for agentic use. And this reminds me that, Illia, we probably need to be talking a lot more about how to use Starknet for a bunch of agent-related economic stuff. together with all the other stuff that we're doing, because I think there's an immense opportunity here. And gentlemen, I really love this, but I have to jump off to my next thing. So
Nice
thank you so
beat.
much, and really honored to be here with you guys. Take care.
Take it easy,
Likewise,
man.
Ellie.
Nice
Thanks.
beanie. Yeah, I mean, guys, I think that X402 concept right now is capturing a lot of mind share. People are really interested about it. People see it as like the logical step for crypto, for blockchain rails. So, gentlemen, it's been a pleasure. Illia, Joel, thank you guys for joining us today on this episode of AI Supercycle. Stoked for NearCon and SF. Hopefully we can do some changing of the perception around crypto there. Illia, I know you're gonna spend a lot more time in SF. So gentlemen, thanks for being here.
Thanks for having me. Always a pleasure.
Alrighty, boys.
A pleasure. Thanks, guys.
All right.
Cheers. Alrighty. Rob, that takes us to the end here.
Indeed, it does. I'm looking forward to setting up my Claude my open Claude instance. Probably
Your Iron
on
Claw
it. My
instance,
Iron Claw instance.
Your Iron Claw instance is what you're
via
going to set up.
a TEE, exactly.
Ladies and gentlemen, thanks for watching Rollup TV today. We're signing off. See you guys tomorrow. Set up that Iron Claw, Rob. We need some agentic workflows here at the Rollup.
That's the plan. I think we did.
We got way too many human
I think it's
flows
about. I think
going
it's about time.
on. We need some
get some
agentic
agentic
flows.
workflows in here.
All right, ladies and gentlemen, till tomorrow.